All right, welcome back for another episode of Carnivore Trade. Today is Friday, January 14th, 2022. So you can see they gapped the markets down here into this trend line on the triple Qs. We've been following this one for a while, and they did get us a bid off of that after the sell-off yesterday. So, and pretty good volume too. Ultimately, today felt like kind of an Opex Monday. Remember, the markets are closed on Monday for the holiday in observance of Martin Luther King Day. And so it really felt like they kind of got the OPEX games going early. You can see a lot of chop here. Markets making a double bottom, then kind of hinting that they were going to make a new low. Turned out to be a bear trap. By the way, notice how volatility did not make a new high. That's something you want to pay attention to as a trader. Volatility is not making new highs and the market's making new lows. A lot of the time it'll be a bear trap. So something to pay attention there. But notice that the triple Qs today did get a little bit more of a bid here, so they were holding up a little bit better. That was helped out by the semiconductors, which were strong today. Even as yields were pushing a little bit higher, tech didn't seem to mind too much, as yields were, getting a bid but not making new highs. So tech able to get a bounce here. In all fairness, it was pretty oversold. If we take a look at the semiconductors, that got trounced yesterday, but getting a bit of relief bid here. This will still have resistance around 309. Cloud software was still pretty weak though, just barely bouncing off a double bottom and really still at the lower range of this red bar here. So cloud software continues to be weak here, and overall tech moving forward, I'm not a fan of, as you guys know. Been preaching that for months, and here it is playing out. But let's take a look at the MACD now on triple Qs. So they did manage to get us a token up week. It closed positive on the week by a couple pennies, really, on the triple Q there. 380.01 versus the close last week, 379.86. But if you take a look here on the MACD, we've been following this little wedge here, massive bearish divergence, and then this wedge. So look at the momentum turning well negative now on the triple Qs. So this wedge is starting to break down, and that should pose more downside for tech and for the markets overall, especially since how tech heavy the overall market is. Now, near term, that doesn't mean we can't get a bit of a bounce. I think that we're probably overdue. You can also take a look at the 10-year here. Did get a nice bid today, but got overbought in the near term. Probably wants to do a little bit of backing and filling and continue with that. Same thing with the 30-year. Nice little bid here, but doesn't mean it can't have a little bit more of a pullback into next week. It is OPEX week, so it wouldn't surprise me if we saw a lot of chop in the markets in general. Take a look at the IWM. So Russell 2000 sold off pretty sharply today. Had a little bit of a kind of a falling wedge pattern here into the afternoon session, then recovered really nicely. So Russell did get a bid off the lows. They defended the lows here, and we'll leave it at that. It probably bids up next week, and we'll see if we can get above these high pivots here. We got 220-ish, and then this lower one at around 219.50. So Russell 2000 getting a bid here, but again, it's been a weak name, a weak index, and I think it's just a matter of time before this breaks down. So we look at the weekly here, sharp move down, and this is all just bearish chop inside of this red candle. So IWM ultimately kind of weak here. Dow, the strongest of the four indices, also getting a bit of a bounce here, holding this support from Monday and getting a bid. Now the Dow was a little bit weaker today, and that was because of bank earnings. So the XLF got hit. JP Morgan down over 6% here, just getting flushed here on heavy volume. So market not liking JP. Citigroup down 1.5, although it did come way off the lows. And Wells Fargo held up really nice all day, up 3.68% here for Wells Fargo, and BlackRock down 2% here. So financials taking a bit of a hit, and that hurt the Dow a little bit. Next week we will have Goldman, which is down 2.5% today. Morgan Stanley, and I believe Bank of America is next week as well. So some of these names down in sympathy to JP Morgan, although Wells Fargo did hold up pretty well, and Citigroup obviously coming off the lows there. So a bit of a mixed bag, but overall somewhat negative there on banks. Dow Transport's moving on here, down 0.6%, but again, still kind of holding this this support area for now. Eventually it will break, but transport's hanging in there for the meantime. Nothing really to do with them right now. XLE, another powerhouse move today. This is coming into monthly resistance though. Right here, it's actually just getting there now. We're at about 65 and change. Maybe it can get up to 66. But this necktie, 200 and 100 moving average, plus this big, I mean, look at this chop here. You kind of chopped a little bit to get through that, did do some consolidation, but there's going to be a lot of resistance in the upper end of this range here. So XLE is, performing very well, but it is coming into resistance. Also crude performing well here, but coming into double top as well. So energy getting a little long in the tooth. I know I've been saying that a lot lately, but it is. Nat gas. So we talked about this, excuse me, Wednesday. Talked about this Wednesday into that 100 moving average, power move, and on the weekly, into the 20-week moving average, and look at that huge tail candle there. So that coming way off the highs here after a massive start to the year. Coming back down to earth here. Nothing to do with this right now. It's just too volatile to really do anything with this swing trade wise. If it pushes lower, and we know where to buy, we already have that level worked out. But if it continues higher, it's got a lot of work to do, but it's going to have to close back above this high here, and then ultimately this red bar high if it wants to continue higher. But I think that's probably going to take time given the recent volatility in nat gas. Just tremendous. I tweeted this out yesterday. It's trading like an altcoin right now. So lots of volatility in that space. We already talked about yields. Let's talk about the dollar. So dollar, I said this was going to be support, and that has held up. 100 moving average. You also have this area. We'll pull it back on the weekly. 94.65 pivot. Resistance becomes support, so you're getting a bounce off of that. Also 20-week moving average, 200 moving average closed above that, and the dollar should advance in the coming weeks here. Gold still ping-ponging in this area. Nothing to do with gold right now. You do have a bit of a bearish inside bar though on the weekly, so just be aware of that. So here's your inside bar, and then you're kind of inside of that. So just be careful with gold right here. Silver, same thing, just kind of hanging in here. Also kind of a bearish inside bar on the weekly as well. So just be careful of that. Platinum and palladium actually holding up a little bit better. So you do have this kind of bearish inside bar, but inside of that you have a small bullish inside bar. So again, platinum continues to hold up inside of this green candle, and palladium as well. So actually, we'll just see the weekly here. So you have this bearish inside bar, and then you kind of have a smaller bullish inside bar. So near term, palladium could get a little bit of a bid. And if it closes above, I think we'll do it one more time. Yeah, well, this red bar high at 2084, then it can really advance, but until then, it is still kind of range bound. Copper trying to break out here, but just could not do it. Weekly pattern is still okay. You did have an outside week, so you got an outside of resistance, but ultimately closed back inside this range. And again, the level here is 434.5 on the downside. And then if you get above this high, you can advance, possibly challenging that 470, 473 area in the near term. Ultimately, we're looking for possibly this trend line here. It's actually kind of a head and shoulder pattern potentially. We're looking for this trend line. Can it hold up? If it can't, then the market breaks down. You go down to this 200 moving average. If not, then you can possibly trade up into this area. But I am in the camp that market is going to be making lower highs in the near term, even if it holds up for the next week or so. And I do expect rates to continue higher, which will put more pressure on tech moving forward. Anyways, guys, take care. Hopefully I feel better next week and I can do these videos without straining the heck out of my voice. I'm sitting here with some Halls and some green tea with honey as it is right now. Anyways, guys, take care. Have a great weekend, and I will talk to you all next week.